Welcome back to Mortgagenomics Canada. I'm your host, Marko. I'm a duly licensed mortgage broker in British Columbia and Alberta, originally from Calgary, currently residing in North Vancouver since 2011. If you're in either province and require mortgage services or advice, don't hesitate to call and text me right away at 604-800-9593, 604-800-9593. One application, one credit check, and access to Canada's top lenders. Today, I'm going to talk about mortgage pre-approval rate holds and all the little nuances that surround them. Like I bet you didn't know that rate holds actually cost the banks money. They definitely cost much more than the paper they are printed on. I'm going to unravel this and plenty more you didn't know about mortgage rate holds. Let's begin. In Canada, mortgage rate holds are one of the most misunderstood elements of the mortgage process. Many buyers hear the term and assume it means their rate is locked in at the very best available interest rate until their closing date. Unfortunately, that's not how rate holds really work. Let's start with how long do rate holds last. Most lenders offer rate holds between 30 and 120 days. The most common is 120 days, which gives buyers time to shop for a property without fear of rates rising before they close. In special cases, such as new construction purchases, some lenders may extend rate holds well beyond the 120-day range. The catch here would be these longer-term holds rarely match the sharpest rates on the market at the current time. You'll pay a premium for the extra security for sure. Now, let's stay on the topic of rates and talk a bit about why rate holds are sometimes higher than the actual rate you are seeking. This is a detail that surprises many. Rate hold rates often come with a built-in premium. For example, let's say the best available live 5-year mortgage today is 4.09%. If you wanted to hold a rate with the lender, the rate hold eligible option might actually be, let's say, a little bit higher, 4.29%. Why would a lender do this? What many borrowers don't realize is that offering a rate hold, especially one as long as 120 days, can be surprisingly expensive for lenders. On average, the cost of holding a rate on $100,000 of mortgage principal can range anywhere from $200 to as high as $900 over the full 120-day period. Now, you multiply that by all the rate holds outstanding for that particular lender. That's pretty significant. But you're probably wondering, what? Why would they do this? I don't understand why a rate hold costs money to a lender. And the reasons are, there's 3 to 4 reasons. The first one being hedging. Lenders often use financial tools to protect themselves from rising rates. And these hedges cost money, especially in volatile markets like we are in today. Another reason, the operational and compliance costs. Rate holds require back-end administration, regulatory oversight, and additional processing. So even if the loan doesn't close, which is a key point I'll address this later. Opportunity cost. If rates rise, the lender loses the chance to lend at those higher rates, reducing long-term interest revenue. And finally, the fallout risk. This is key. A large percentage of borrowers who request rate holds never actually close on the mortgage. So when a borrower walks away, the lender still eats the hedging and administration costs without seeing a dollar in return. So this is why some lenders bake a small premium into their rate hold offers to help absorb the costs of what's known as dead files, applications that haven't completed. Let's move on to variable rate mortgage rate holds. Many believe that you cannot reserve rate holds for variable rate mortgages because they are linked to prime rate. For variable rate mortgages, what's held is not the prime rate itself, but the discount off prime. Okay, so for example, if today's offering is prime minus 1%, your hold will lock in that minus 1% discount. If prime rate rises or falls before closing, your contract rate will move with it, but the discount remains intact. Another thing to be aware of is what happens when rates change. Do rate holds adjust automatically? This is probably one of the biggest misunderstandings when it comes to rate hold guarantees. Rate holds do not automatically adjust if the market improves. If rates drop during your hold period, you won't get the lower rate unless you or your broker request an adjustment. Some lenders are very flexible and will allow multiple adjustments. Others limit the number of times you can reset your rate. And a few don't allow adjustments at all. That's why working with an experienced mortgage broker matters. Brokers know which lenders allow for adjustments. They know how often and under what circumstances these adjustments can be made here. So, 4 words here: use a mortgage broker. So with all that being said, do rate holds still matter? Despite the limitations, rate holds provide valuable peace of mind. If rates go up, you're protected. If they go down, you have the opportunity to adjust or pivot accordingly. A mortgage rate hold isn't a perfect shield. It doesn't guarantee the lowest possible rate, and it doesn't automatically adjust if the market shifts in your favor. But when used strategically, it can be a powerful tool, especially for buyers navigating the competitive markets or longer purchase timelines. Rate holds are also critical for mortgage renewals, as you can also lock in or reserve the rate 4 months prior to your maturity date. So the key takeaways for this episode: know how long your rate hold is valid for, know whether your rate hold carries a premium or not, and know how many adjustments are allowed in the event rates drop in your 120-day rate hold period. Okay, that's all I got for today. Call or text me anytime if you have any mortgage questions at all, especially if you're in British Columbia or Alberta, as I am licensed to service these specific provinces, and especially if you are from Vancouver or Calgary, as I am very familiar with these markets. Come to me for all your mortgage needs. Call or text me at 604-800-9593, or you can get me on WhatsApp, or just go ahead and link up to my website, homefinancingsolutions.ca, where you'll find my complete catalog of past blogs and podcast episodes. And one more thing, check out my award-winning mortgage app. It's embedded somewhere in the notes or profile section from where you are listening to or viewing this. This thing is amazing. It comes equipped with tons of calculators, market interest rates, and every other thing you can imagine. It even enables you to do a snap pre-qualification on yourself. You got to check it out. Give it a try. Thank you again for tuning into Mortgagenomics Canada. Stay well, everyone. Talk again soon.